Today I'm going to be sharing with you my top 3 stocks on my $25 a week M1 Finance portfolio and the upcoming changes that I have planned. Hi everyone, this is Camilla the Focused Spender and welcome to my channel where I teach you how to get out of debt, save more money, and invest so that you can build wealth and leave a lasting legacy. So in December 2020, I decided I wanted to start investing in companies that were basically benefiting from us being in shutdown, being on lockdown, because there are definitely some companies that did well with everyone staying home. So I started thinking about companies like healthcare companies. I knew there would be a vaccine coming soon. I knew that people were going to the hospital, unfortunately, so healthcare costs were going to be going up. And so there was going to be some increase in those companies' profits. And I also thought about pet care companies because everybody was buying a COVID pet. When I decided to make the portfolio, I decided I was going to go with my trusty M1 Finance because I wanted to make sure that I was building a balanced portfolio, that I wasn't just buying, a couple of shares in this company here, a couple of shares in this company over there, and then buying it and then never thinking about it again. I wanted to do it on a set schedule and make sure that I had a balanced portfolio and also to take advantage of dollar cost averaging. So I went with M1 Finance. Now, how did I do overall? I would say I did really well. So when I look at my other M1 Finance portfolio, recently there was a huge dip in both of the portfolios and just in my investment accounts overall. And comparing that portfolio with this current one, that portfolio had a huge dip. And right now, even though it's rebounded, it's pretty much at the level that it was prior. But this new M1 Finance portfolio, it had a slight dip and it has rebounded and completely surpassed where it's been prior. So I knew that this was my winning portfolio overall. So the portfolio is not that large. It's only about $3,100. When I started out, I put it in $1,000 and then I put in $25 every single Monday. And since then, I've received $60 in dividends and my market gains is $353.24. So overall, my account grew by 22.68%, and I'm pretty pleased with that growth. So let's go into my 3 highest performing stocks. Now, third place is a company that's probably the most obvious choice for a company to pick, thinking about quarantine, COVID-19, lockdown, all of those things. That company is United Healthcare Group, and that is a company that provides health insurance to millions of Americans. Now, I did not come up with this company on my own. I definitely did my research to find a healthcare company that was stable, that provided dividends, that was a reliable company that wasn't going to go anywhere. And everywhere I looked, people said you really should add this to your portfolio. So overall, my investment with United Healthcare Group has increased by 65.55%. So that is phenomenal. This company represents 20% of my portfolio, and I invested $417.99 overall, and my account has grown by $218.78. So my current value is $629.43. So I'm very happy that I decided to go with this company because it has been a reliable bet. In second place is a company that I honestly kind of threw in at the last minute. So when I created my portfolio, I really was trying to shoot for 10 stocks. But then a couple of days later, I was like, you know what? You should add this stock to your portfolio because it was just a company that is constantly in the news. People are constantly talking about it. The share price is through the roof. Actually, right now, the share price is over $1,000. And I thought, you know what? Let me just add this to my portfolio. And that company is Tesla. So I decided I wanted to get in on the Tesla wave. Honestly, my overall investment with Tesla is really small. Tesla only represents 10% of my overall portfolio, and I've invested $197.94, and my account value has grown by $129. So my overall increase is 77.41%, which again, is pretty good. And so I'm very happy with that stock pick. So my number one stock pick in my portfolio is a company that honestly, I knew I wanted to invest in this type of company, but I couldn't have predicted the current climate that we're in. So there was no way for me to know that right now it would be doing so well. But when I tell you the company, you'll understand why it's doing so well and the fact that it probably won't last. Honestly, it won't last if I'm lucky or if you're lucky. So the company is ExxonMobil, which produces gas. And obviously gas prices are through the roof. The last time we filled up our tank, it was $65. No, I should say the last time we filled up our tank to the max, it was $65. The last time we went to the gas station, we said, here's $40. Do what you do. That's it. $40, that's it. So Exxon, because gas prices are through the roof, everything that's going on in the world right now, their stock price has gained tremendously. So I looked at my average share price. So the average price that I paid for this company was only $47 per share, but the current share price is $86. So overall, my account value with Exxon has grown by 129%, which is tremendous. Exxon does represent 15% of my portfolio, and right now I'm like, dang, I wish it was a little bit more. Or I should say, I wish when I set the account, I made this a little bit more. But I do have another oil company within my portfolio that has done well as well. My total investment was $304.08. My increase in value right now is $256 for a total value of $560.38. And I did receive about $24 in dividends. So the $1 million question that you may or may not be asking yourself is, if those three companies did so well, why are your overall gains only 22%? Because I just told you I had a company that gained 65%, another one that gained 77%, and another one that gained 129%. So you would think this portfolio would be through the roof. But I had some duds, and the duds are companies, at least one company, I definitely did not expect this to be a dud. And the other company, you know, it was kind of a risk for me throwing it into my portfolio anyway, so it really doesn't surprise me. So the first company, the one that surprised me, that represents 15% of my portfolio, is Facebook. Facebook, you know, they were like everything just a couple years ago. Like, that was a company you always had in your portfolio because it was so reliable. But this is a testament as to why you can never just stick with one company, with one industry, because you just never know what's going to happen. Now, the percent decline for my portfolio isn't that dramatic. The percent decline is 29.92%, so just about 30%. But the company, like I said, represents 15% of my portfolio. So I have a large share of my money with this company. So when they do bad, it kind of really brings down my overall portfolio a lot. There was a couple of other companies that did bad, but the other company that I really wanted to point out is Peloton, which sucks because I just bought a Peloton bike. If you're one of my subscribers, you probably saw the picture on my community board, but if not, make sure you go to my community board and you'll see a picture of my brand new Peloton, which I love. I actually just used it today. So the company just isn't doing that well right now. I was listening to a podcast and they kind of explained, or they tried to like rationalize what happened. So their thinking is that, you know, of all the people that bought Peloton, they all were kind of concentrated within a certain time frame, whereas those same people would have probably bought a Peloton bike regardless whether or not we were in quarantine, but they probably wouldn't have all bought it at the exact same time. So it kind of gave Peloton a false sense of like their demand. It seemed like their demand was just higher, but it was kind of just concentrated within a couple months. That being said, I don't think Peloton is going to be going anywhere, but I do think they're probably going to have to be bought out. And my hope is that Apple or Amazon or Nike or someone buys them out and the stock price increases, and then my portfolio will just go through the roof. The one thing I want to be clear on is that when I put this in my portfolio, I knew it was going to be a risk. Everyone was talking about it. It felt like a meme stock. I had no intention on buying a Peloton bike at that time. So I really was like, well, everybody's talking about Peloton. Let me just put it in, you know, maybe they'll do really well and that'll be it. But they didn't. But I do know people who put a lot of money on Peloton because they thought it was a sure bet. The moral of the story is there is no such thing as a sure bet. There's a good bet. There's a, let me look at the metrics of this company and this may perform well, but something bad could happen and it could not perform well. You always want to make sure that when you are buying individual stocks and not going with an ETF, you are spreading it out between companies and industries just to cushion yourself for times like this. So in terms of what I'm going to be doing next, I am going to turn up my investment just a little bit. I think I'm going to put it up to $35 a week, and I'm going to make some adjustments to my current portfolio. For some of the ones that are not doing well, I might just dial down the percent a little bit. I might even add a new company into the mix just to shake things up. And if you want to see exactly what I end up doing, please click on the link to my website, and then you'll be able to see my full portfolio with my new mix. And if you want to learn a little bit more on how to use M1 Finance, you can watch the video that's popping up on your screen, or you can click on the link to M1 Finance in my description box below. I hope you enjoyed this video, and I will see you next time. Thanks. Bye-bye.